A number. That's all it is. 9,000. Three digits and a dollar sign that have become a gravitational field, pulling in the hopes, the fears, the capital, and the very soul of the entire financial world. $90,000. For Bitcoin, this is no longer a distant target on a chart. It is the front line, the battlefield of the moment. The price dances just above it, a nerve-wracking ballet on a high wire suspended over a canyon of volatility. The air is electric with a single screaming question that every trader, every institution, every curious onlooker is asking: will it hold? To even begin to answer that, we must first understand what $90,000 represents. It is not a random line, it is a monument, a psychological fortress built from the shattered remains of every previous all-time high. For over a decade, Bitcoin's entire history was a struggle to reach and claim its last peak. Now, for the first time ever, it is operating in uncharted price territory above that old zenith. $90,000 is the first major frontier in this new world. Holding above it isn't just about technical analysis. It's about proving that the old ceiling can become the new floor. It is the ultimate test of this bull market's legitimacy. A failure here wouldn't just be a dip, it would be a psychological rout, a signal that perhaps the market isn't as strong as the rally suggested. But holding here, that would be a declaration of a new epoch, a statement that the rules have truly, irrevocably changed. So what are the forces arrayed on this battlefield? Let's survey the armies. In the green corner, the bulls, armed with an arsenal of powerful structural arguments. Their first and most potent weapon is the institutional absorption engine. The spot Bitcoin ETFs, led by the colossal BlackRock and Fidelity, have changed the fundamental physics of Bitcoin supply. They are not traders, they are vacuum cleaners. Every day they siphon thousands of Bitcoin out of the circulating supply and into long-term custodial vaults. This creates a constant, grinding buy-side pressure that is indifferent to daily price swings. The available liquid supply of the Bitcoin actually moving on exchanges is drying up to historic lows. When supply shrinks and demand persists, basic economics dictates price appreciation. The bulls argue that this engine alone provides a steel-reinforced floor far below $90,000. Their second weapon is the halving catalyst. We are now in the shadow of the most significant Bitcoin halving in history, an event that has just cut the new supply of Bitcoin mined daily in half. In previous cycles, the full parabolic effect of the halving was felt 12 to 18 months after the event. We are now entering that exact window. The halving scarcity shock is colliding with the ETF's demand shock. This is a supply-demand equation so powerfully skewed that bulls believe any drop below $90,000 is a temporary discount, a gift, a last chance to board the rocket before it leaves the gravity well of old prices for good. Finally, the bulls have the macroeconomic winds potentially at their back. Global instability, currency devaluation concerns, and a growing loss of faith in traditional finance's plumbing are driving a narrative of Bitcoin as a sovereign digital hard asset. In this environment, $90,000 isn't a peak. It's a way station on the road to being digital gold. They see the recent consolidation not as weakness, but as strength, a healthy coiling of the spring before the next explosive move upward, with targets like $120,000 or even $150,000 now entering the realm of serious conversation. But across the trench, the bears and the cautious realists are dug in, and their arguments are not based on fear, but on cold, hard market mechanics. Their first line of defense is profit-taking and leverage. The run from $20,000 to over $90,000 has minted generational wealth. The temptation for early investors, miners, and traders to liquidate a portion of their holdings is immense. Every touch of a round number like $90,000 triggers a wave of sell orders from those locking in life-changing gains. This creates a massive, predictable wall of resistance. More dangerously, they point to the over-leveraged casino that is the crypto derivatives market. Billions of dollars in leveraged long positions are stacked like dynamite beneath the current price. These are bets that the price will go up, funded with borrowed money. If Bitcoin wavers, even a 5 to 10% correction from $90,000 could trigger a cascade of automatic liquidations. These forced sells would amplify the downward move. potentially creating a violent, self-feeding crash that could slice through support levels like a hot knife through butter. The bears whisper that the market is a coiled spring, all right, but one that could snap downward with terrifying speed. Their third point is regulatory and macroeconomic risk. The crypto market does not exist in a vacuum. A hawkish turn from the Federal Reserve, a surprise regulatory crackdown on a major exchange or stablecoin, or a severe recession in traditional markets could trigger a risk-off panic that floods out of all speculative assets, Bitcoin included. The ETF inflows, while strong, could prove fickle if traditional markets tumble. The bears argue that the market is pricing in perfection and is utterly unprepared for a single piece of bad news from the old world. So who is right? The truth, as always in markets, is that price is a function of the constant, real-time war between these two sets of narratives. The chart itself tells the story of this war. Holding above $90,000 isn't about a single candle closing above that line. It's about creating a zone of consolidation. It's about the price dipping to $88,000 or $86,000 and then being aggressively bought back up over and over. Each successful defense of a higher low builds a stronger foundation. We need to see the market treat the $88,000 to $92,000 range not as a ceiling, but as a new support band, a place where it can catch its breath. This process takes time and volatility. It is messy and nerve-wracking. Watch the key indicators. First, ETF flows. A return to consistent daily inflows would be the strongest possible signal that the institutional bid remains intact and is absorbing all selling pressure. A sustained period of outflows, however, would be a major red flag. Second, exchange reserves. Are coins continuing to flow off exchanges into cold storage, bullish, or are they starting to flow back onto exchanges in preparation for selling, bearish? Third, the funding rates in the perpetual swap markets. Excessively high positive funding rates indicate traders are overly bullish and paying high fees to maintain leverage, a classic contrarian warning sign of a crowded trade that is ripe for a flush out. In the end, the question of whether Bitcoin holds above $90,000 is a question about the nature of this cycle itself. Is this the final euphoric blow-off top before a major correction? Or is it the hesitant first step into a price discovery phase that will redefine what we consider possible? History offers no clear guide because we have never had ETFs. We have never had this level of institutional adoption during a post-halving year. My analysis leans toward a conclusion of cautious, volatile strength. The structural forces of ETF demand and post-halving scarcity are too powerful to ignore. They suggest that any significant drop below $90,000 will be met with monumental buying pressure from institutions who missed the first leg up. However, the path will not be smooth. The market will likely hold above $90,000 not by staying perfectly still, but by treating it as the center of a new, higher trading range, perhaps between $85,000 and $100,000. Expect gut-wrenching 10 to 15% corrections that feel like the world is ending, only to see the price slowly, stubbornly grind its way back. The mental game is now everything. Holding above $90,000 is as much about psychology as economics. It requires the market to believe it belongs there. Every hour, every day it spends above that line reinforces the belief. It becomes a self-fulfilling prophecy. But one piece of bad news, one cascade of liquidations, can shatter that belief in an instant. So will Bitcoin hold above $90,000? The most honest answer is this. It has the fundamental tools to build a fortress there, but the walls are still being built under fire in a storm. The next move will tell us not just about a price, but about the maturity and resilience of an entire asset class. Strap in. The battle for the first frontier of Bitcoin's new world is underway, and every single one of us is a witness to history,